It has been very quiet around soy in the last month. The asset did not appreciate nor depreciate much. It just went in line with Bitcoin. The question is, why? Is this potentially an opportunity when nobody's watching to buy, to then sell when attention goes up again? Because there is a lot of correlation between attention and price. Now here's what I mean. We are currently at $3.29. Soy went down by roughly 3% in the last month, and Bitcoin did the exact same thing. Interestingly enough though, the riskier altcoins, they tended to outperform in the last month. For example, here, Ethereum went up by 27%. Or over here, this is the performance of Solana, the same gains as Ethereum. So what's going on? Soy is not just a random token, right? It's its own blockchain with its own ecosystem. Unfortunately, there isn't necessarily a clear growth path in the data. What we see here is the number of transactions over time. This is a long-term chart. It starts in April of 2023, so that's 2.5 years of data. And sometimes activity spikes and then it crashes down again. And that's the same for the number of new accounts over the time or the number of active accounts over time. So yes, sometimes there is some activity, but it seems like Soy as an ecosystem is not necessarily that sticky. People that try it out tend to leave rather quickly again. And so in order to get an idea where the price might be going from here, there's two interesting data points. The first one is relative valuations to other cryptocurrencies, Bitcoin, Ethereum, Solana, or in general, the others market cap. But secondly, we also want to look at tokenomics, as in how is the circulating supply of Soy developing over time. Let's start off with the second, so the tokenomics. The project launched with only 500 million tokens and then grew all the way to its current 3.6 billion tokens, so more than a 7x in supply. Who's getting all of that supply? It's mainly the early investors and the team. Despite this massive supply increase, Soy was able to somewhat keep pace with Bitcoin's price performance. So this is Soy relative to Bitcoin. And yes, the very long term isn't that bullish. We have seen an underperformance of 38%, but that's not that bad given the massive supply expansion. We are currently pretty much in the middle of the trading range. Now over here, we've got Soy relative to Ethereum. And here the range clearly is not as stable. We have broken out to then turn around at the beginning of April of this year. This is when Soy underperformed Ethereum. But again, this is not necessarily because of Soy doing that poorly. It's because of Ethereum doing that well. Because Ethereum outperformed pretty much everything else since the middle of April of this year due to the treasury company narrative. There are now companies that just acquire Ethereum as a reserve asset that purchase more and more of the supply, thus pushing up, at least long-term, the Ethereum price relative to the rest of crypto. And so here's the Ethereum dominance. This is a measure of how much of all of crypto is in ETH. And since the middle of April, this is going up massively. So we've got an outperformance of Ethereum versus the rest of crypto by roughly 100%. And so this comparison of Soy relative to ETH since that top is probably not as fair. What I believe is a better comparison is to not look at the relative valuation to Bitcoin or to Ethereum. Both of them have ETFs. Both of them have treasury companies. What I think is the best comparison is just Soy relative to other altcoins. So this is a Soy price relative to the others market cap. So that's the market cap of all the altcoins that are not in the top 10. Soy is one of them because Soy is at market rank 14. And here we do see how despite the token inflation, Soy kept pace with the overall altcoin market. It only underperformed by 12%, but recently it tends to rather appreciate. And it seems like it's currently comparatively cheap. What's the potential upside? Maybe, in the best case, close to 45%. Now the big question is, would an appreciation of Soy of 45% actually be justified? If we look at the activity, let's say on decentralized exchanges, if we look at the total value locked, so how much capital is currently on the Soy chain, if you compare those numbers with similar chains and we look at the market caps, is Soy currently cheap or is it expensive? Let's have a look. Soy has a market cap of 11.7 billion. Hyperliquid has a market cap of 11.9 billion. So very close. The blockchains do vastly different things. Hyperliquid is mainly focused on perpetual futures. Soy is an all-purpose blockchain. But still, let's have a look at comparable total value locked metrics. So how much capital is in each chain? Soy has a TVL close to $2 billion. Hyperliquid has a TVL of $2.4 billion. So roughly 20% more, despite the market cap not being 20% higher. The market cap is very similar. And I'd go so far to say that the growth of Hyperliquid tends to be a bit more constant compared to the TVL growth on Soy. So the disparity is likely going to grow over time, which then means that at the current market cap, soy relative to Hyperliquid tends to be rather expensive. But let's have a look at other general purpose blockchains. For example, Solana. Here we've got a market cap of 109 billion. That's roughly 9 to 10 times of the market cap of soy. Again, soy is at 2 billion TVL. Solana is at 11 billion TVL. So the ratio of the total value locked to the market cap implies that either soy is too expensive by 2x and it should drop by 50%, or that Solana should double in market cap. But again, the comparison shows that soy is not cheap right now at 11.7 billion relative to Hyperliquid, relative to Solana. What about the trading volume? So we've got 313 million worth of trading volume on soy in the last 24 hours. And on Solana, that's 5.4 billion. So roughly 19 times the activity. But again, Solana is not 19 times the size of soy. It's only 9 to 10 times the size. So again, a very similar potential undervaluation of Solana or overvaluation of soy. Let's play with the idea that it's actually soy that's currently overvalued. This is how that would look like on a chart. This is soy relative to Solana. If it was to drop by 50%, we would just go back to relative valuation we have already seen in the past. Just from a TA perspective, this doesn't look completely unreasonable. We could definitely go back to similar levels that we saw 1 year ago. I actually think it's very likely we are going to see such levels, because once we look at the total value locked on soy, not measured in US dollars, but just measured in soy tokens. So now we just look at the decentralized finance activity independent of the price action. Then there's pretty much no growth in the last 1.5 years. And that would justify to see similar prices relative to Solana compared to 1 to 1.5 years ago. Now that then begs the question, right? Why is soy that expensive, relatively speaking? What is holding up the price that much? When the token is more inflationary than Solana, when the activity isn't really growing that much, what's pushing up the price? I believe the answer to that is short-term speculation via derivative contracts, via perpetual futures. And here's why. Have a look at the trading volume in the last 24 hours. This is now the spot market, and we had 142 million worth of trading volume on Binance. Now compare this with the perpetual futures market. Here we had way more trading volume, more than 4 billion of short-term capital just on MEXC. So this is really where the price discovery is happening. It's not on the spot market, it's all on the perpetual futures. And the nature of perpetual futures is that it's short-term capital. If you want to hold an asset long-term, you just buy it spot, because getting the exposure via perpetual futures is expensive through the financing costs. So whoever buys perpetual futures wants to get in and out of the asset very quickly with very little slippage. So it's all about the transaction costs. It's not about the cost of holding it long-term. Now, most people that bet on soy on the perpetual futures are betting on rising prices. The funding rate is positive, so the longs have to pay the shorts in order to get levered exposure to the asset. The issue is that most of those people do get liquidated frequently. Here is the number of long liquidations on soy. And just have a look at the correlation between the open interest, so the bets on the price, versus the spot price. So the open interest is in green. This is how many bets are currently being made on the soy token. We are close to 2 billion now. And the spot price is in yellow. And there is a connection here, right? When there's more bets on the price, spot tends to go up. As there is less bets on the price, spot tends to go down. And currently we are comparatively high in open interest. There is a real possibility that open interest could drop again to 1 billion and below. And that's short-term capital leaving the market, especially since it's mainly long capital, can very much depress the price further relative to Ethereum, relative to Solana. And the big question is what happens relative to the other altcoins. There is a support, but I'm not yet convinced that this support will hold. I'm currently not positioning myself in either direction of soy. I'm not betting on rising prices nor on falling prices, but if we break this support over here, I might actually start betting on falling prices. I might start betting on the open interest going down, on the asset deleveraging and getting back to something that might be considered a fair valuation relative to the activity on the chain. Of course, whenever opening a short on soy, it's important to keep a very tight stop loss, because because there is quite a bit of volatility. But again, I'm not betting on any direction right now. There is a chance of a bounce. The momentum in SOI has been bearish for quite a while, but that doesn't mean it can't go further down. Again, because there's so much short-term leverage, the token is inflating, and the DeFi ecosystem really isn't growing that much anymore. Now, wherever there are patterns in price movement, there's a potential opportunity. A lot of people say that it's just random, that there's only luck involved in trading and in active investing, but really, once we have repeatable patterns, it's not. So let's look at this fundamental pattern. This is Dogecoin as an example. Very often we see prices shooting up extremely quickly to then deflate over a very, very long time afterwards. So for whatever reason, the price moving up happens much faster than the price moving down. We see this in Dogecoin. We also see this in Floki Ino, right? Just have a look at how quick this rally happened and then how long it took to deflate again. And it doesn't just happen with meme coins, right? This is XRP. It went up quickly to then subsequently deflate for a very long time. Or here, right? The rally happened just in a matter of a few days. A secondary rally happened, but then again, the deflation took a long, long time. So there is obviously some kind of pattern here. And this is across the entire crypto space. And there is a fundamental reason for that. I believe that reason is attention. People say that we live in an attention economy and that attention equals money. And for crypto, that's exactly the case as well. As there is more attention on an asset, the price tends to go up. Now, why does it go up much faster than it tends to go down? Because usually there's some kind of event that happens that brings all the attention on an asset. So people read the news and they wonder, should I buy TON now? Should I buy XRP now? Should I buy YZY? Whatever it is, right? There's always something going on, and attention means potential purchases. There's also influencers that talk potentially about small cryptocurrencies that then bring a lot of purchase orders with it, right? When thousands of people watch a certain video on a small altcoin, then of course this has some implication on the price. And so we've got this overall capital pool that tends to grow over time, right? Crypto is still a growing market, but within that capital pool, it tends to concentrate towards a few assets at different points in time. Once there is attention on an asset, the price goes up, but then if there's no new news, then the attention tends to fizzle down and tends to go to the other assets. So it's a bit of a game of whack-a-mole, right? There's asset A that gets pumped up, then it's asset B, etc. And so this is where most people lose, right? Most people try to find the needle in the haystack, the 1, 2, 3, 4, 5 altcoins that made the multiple X returns, while the vast majority tends to go down. How likely is it that when you're buying the next recommended altcoin, that's going to be the next KeyCat or the next Dog in Me or the next GP token? The likelihood is rather low. You're probably ending up rather with Coino or with Pepecoin or with the Apex token. If you're really honest with yourself, when you look at your altcoin trading and you compare that performance, not to the US dollar, but relative to just the buying and holding Bitcoin, Ethereum, and Solana, how much did you actually outperform with the active trading? Very likely you underperformed. And again, this is because this is a rigged game. There are a few people that influence the market, that push up prices, and then over time those prices deflate again. I'm doing the exact opposite. I'm trying to find the tokens that got hyped, but where then that hype is dying down, where we're already in the deflation. And then I bet on relative valuations that those kind of assets continue to do worse than Bitcoin, Ethereum, and Solana. So while the vast majority of retail investors, they just buy what the influencer has shilled, what the influencer is promoting, where the influencer potentially even got money to promote it, I do the exact opposite. I bet on falling prices at that time. So let's say Elon Musk tweets about Dogecoin again. Dogecoin pumps up. The retail investor gets in. That's when I put this on my watch list. And I'm looking at what point in time is it starting to deflate. And I bet on falling prices over here. Just have a look at what I shared on February 14th. I'm entering a Dogecoin relative to Bitcoin short position. Then 1 month later, I sold it. And that was because Dogecoin underperformed Bitcoin at that point by 32%. So that's what you want, right? You want underperformance when you bet on falling prices. There are a few details to this strategy, but it is a long-term winning approach. Just have a look at a few trades that our community has done. Now, I've actually opened a capital pool where the community members, the premium community members of this channel, were able to pay in. This capital pool, unfortunately, has already been closed because we have hit our maximum deposit limit. We are still trading with this until end of the year. I will continue to share the performance here, but it just shows how constantly we can make money by doing the opposite of what most other people are doing. This is 1.5 months. The maximum drawdown from top to bottom was only 2.6%, and we are already at an annualized return of 78%. Before running this capital pool, I've done this approach myself on my own capital, and that's the return over the last 4 years. So this is just a chart from Excel. This is monthly data. Had I just dollar cost averaged into Bitcoin, I would have gotten the return here marked at this gray line. But because I also did shorts on very poorly performing altcoins, I got the return indicated here in black. And I know it can be a bit daunting at first, doing something completely different, going long one asset, going short another asset, doing an entirely different approach compared to just buying an altcoin, just following an influencer that promises you the next 10 or 100x. I know this is a different mindset, but again, we have to do the opposite of what most other people are doing. I created some tutorials to make this as easy as possible. If you want to keep it brief and you're busy, you just have to watch 2 videos. How to use perpetual futures on Hyperliquid and how to do risk management with relative valuation bets on Hyperliquid. It's only those 2 videos and they are in total just 1 hour in length roughly. After you have watched those 2 videos and you've joined the community, I will then send to you my favorite trade. Now that favorite relative valuation trade tends to go up quite consistently, and I've got a strong conviction that it will continue to do so. And because of that, if you enter that particular trade and you do not make money after 1 month of holding this trade, I will refund you 100%, no questions asked. I'll refund you for the premium membership. The monthly rate is currently $125. You can either pay via credit card, or if you want to pay in crypto, you can do that as well. For crypto payment though, the minimum duration is 3 months. But again, after 1 month, if you don't make money with that trade, I will just refund you. You can watch all the videos basically for free. And it's not just about the videos, it's also about the trades that I share in real time. We can basically manually copy trade what's currently being done with the capital pool. Yes, the capital pool is currently closed, but if you join the annual membership, you will get the chance for early access to the next pool that will start at the beginning of next year. So if you don't want to invest the time, you instead just want to invest the capital, let this run for you. Then with the annual membership, you will get that offer first to join before the deposit limit is hit. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.